and it's time to deep dive into your investment portfolio and also time to know how our fund managers upping their game. I have with me Dikshit Mittal, Senior Fund Manager, Equity, LIC Mutual Fund. Hi, Dikshit. Afternoon. Welcome to the show. All right. So now I really want to gain something out of your experience. Talking about July series, which historically has been stellar. Out of 10, 9 times we've seen the average gain on Nifty has been 3.9% now. Having said that, this time the July series looks very strong so far. We are talking about a decent foreign investors return. We are talking about good numbers on technical charts. We are talking about falling oil prices, although amid of all uncertainties going on. Earnings season is also approaching. Talking about historic performance in July and the current, are you looking at the market trajectory right now?
Yeah, sure. Thank you for inviting me. Basically, for us, very difficult to take a monthly, month-on-month call on the markets. But on a broader perspective, if we see on from macroeconomic perspective, India seems to be enjoying quite a few tailwinds at this moment. Largest being, you can say, falling cost of capital. Interest rates are at around 6.3%, which is supporting the market valuations. But at the same time, the kind of macroeconomic, you can say, variables that we are enjoying, like low fiscal deficit, falling inflation, ample liquidity in the markets. So all these things actually helping the markets to remain buoyant, at least in the short to medium term.
Okay, so a lot of economic indicative actions which are in favor of the domestic markets. Dikshit, good afternoon. Mansi this side. Yes, of course, a long-term perspective and the undertone of the market seems bullish and positive. Considering the same and talking large about the portfolios, what are the top compounding themes maybe for the next 3 years? What are the secular themes, the sector-specific approach that you have?
Sure. So for the next 3 years, we think private capex has still more legroom to play. So we have seen last year private capex actually surpassing the central government capex, and I think this segment has been growing in high teens. I think there are more legs, especially on the manufacturing side, on the power-related capex side, and also on the, you can say, data center kind of themes which are playing. So I think private sector capex, I think, is the theme which we are betting for the next 3 years. Secondly, secular theme which we think which can come back maybe during sometime next year is you can say discretionary consumption, because the kind of impetus that government is trying to give in terms of lowering effective personal tax rates, are they also chipping in by increasing the liquidity in the system? And also so far we have seen good monsoons, rural wages are doing well. So all these things make us hopeful that consumer discretionary can be the sector to watch out for the next at least 1 to 2 years. And then some of the secular themes like domestic pharma, manufacturing, I think these are a few themes which we are betting on across our scales.
Dikshit, let's talk about market caps. You know, we really need, as far as the portfolio is concerned, we really need large caps to provide us stability and consistency in the portfolio. But really, you cannot miss out the mid caps and small cap, you know, if you really want to give a push to your returns and benefit in your portfolio. Now, having said that, I would ask this question from an investor's point of view. Looking at the small caps resurgence, you know, looking at the way they are stealing the show from the large caps, is it time to maybe rebalance your core portfolio and have a slightly more tilted shift towards small cap? How are you looking at small caps? You know, we were talking about time correction. That's a lot of buzz going on. Are you looking at that time correction in certain pockets in small caps? See, as a fund manager, the universe of a small cap is really huge. You know, you really have that freedom to create a theme and a philosophy and give a return push to your fund also. Having said that, from an investor's point of view and from a fund manager's point of view, what's going to be your strategy in small caps now?
Yeah, so basically, as you rightly mentioned, it's a case-to-case scenario because one has many large opportunities, even beyond the index, also in the small cap space. But broadly, if we see small caps and mid caps on the earnings front has been growing faster than the larger, you can say larger peers, at least for the last 2 to 3 years. And part two is to do with the index composition also, because most of the large cap index are, you can say, heavy on the more mature sectors of the economy like financials, IT, oil and gas. So these are slightly more mature sectors, but at the same time, in mid cap and small caps, one can get exposure to the, you can say, upcoming high growth sectors So to that extent, one should be, you can say, well balanced. As you rightly mentioned, large caps are providing stability. And across our portfolios, we are trying to maintain the balance, but we are on the continuous lookout for some of the unique stock specific or sector specific ideas, which may not be present in the indexes, but which can provide some kind of incremental returns to the investors. So one has to be balanced, and one has to focus on growth, where the growth is, because money eventually chases the growth. And at this point in time, what we believe and what we are seeing is that there are many opportunities, especially in the, you can say, below 200, top 200 companies, which are growing better than the, you can say, top 100 or top 50 companies, and valuations are also quite reasonable. So we are taking stock specific and sector specific approach here.
Absolutely second the thought. One has to be mature enough, and it is a tricky market, and tactfully strategizing the market is very much important. And like you said, there are many pockets. So if you can throw some light on the pockets which you are considering at present, and if also you can add some stocks, only if possible, if the disclaimer disclosures allow, the compliance allows you to, and at the same time, your core investment philosophy, Dikshit.
Sure. So in terms of investment philosophy, what we try to look out for, you can say, one is scalability. Business should be scalable, capital efficient, incremental returns on capital, which should be higher than the cost of capital, and then eventually the balance sheet hygiene. I think these are the three key inputs that go into our investment philosophy, and whatever stocks they come into after these three filtering criteria, I think those are investable for us. And in terms of pockets, what we think is consumer discretionary. You can say we are expecting that to come back in next 1 to 2 years. So we are trying to find some of the opportunities there, maybe into retail space, travel space, or eventually into the branded apparel, branded footwear, those kind of space. I think we are looking into. And then theme which we are continuing to be bullish is private capex. I think this will continue to do well. And some of the pockets into the, you can say, stock specific companies which are basically trying to gain global market share in exports. Those may be in chemicals, in pharma, contract manufacturing space. I think these are the three themes, three pockets where we think earnings are outpacing the broader markets and where investors have opportunity to make good money over next 2 to 3 years.
Sure. With you having on board, we can only talk about long term, and also for an investor, having a long term portfolio which is aligned to a financial goal really makes sense. As far as your AMC is concerned, I really want to know what's the flow like, because SIP numbers are, every month on a high. If you talk about LIC mutual fund and talking about the fund mix an investor is preferring, what's the current trend? If you can just shed some light on it and just talk about some investor behavior in terms of choosing market caps and even the exposure, funds where you have seen redemption or maybe, difference in choices in terms of market caps or fund selection from an investor's point of view.
Sure. So basically, we have been getting continuous inflows, not only through SIPs, even lump sum also, we are getting large inflows. So I think last week itself, we have crossed 41,000 crore kind of AUM mark. And in terms of incremental money, I think most of the money which we are getting into the multi-cap kind of categories, or you can say into the some of the categories which are more diversified, multi-cap, flexi-cap kind of categories we are getting. And of late, we have also started seeing some of the money flowing into the, you can say, hybrid funds like Balance Advantage Fund. So maybe investors who are not comfortable with the current valuations, so they are taking slightly defensive calls. And so hybrid funds are also getting. So eventually, what I can say is multi-cap, flexi-cap categories and some of the hybrid categories we are getting good inflows.
I hear you there, Dikshit. One last thing, we are on the cusp of entering the earnings season. Give us some sense on what's your take on the quarterly earnings. Is it the consumption basket? Is it the IT? Because with IT major TCS is where the earnings season will kick in. Which are the sectors which one should keep an eye on, and what's on your focus radar with regards to quarterly numbers?
Yeah, so basically consumption has been lagging for the last 3 4 quarters. And this quarter also we expect to be no different because whatever measures that government and RBI has taken, I think on ground they will take some time to reflect into the actual numbers. So maybe from third or fourth quarter when the festive season also kicks in, we expect the consumption to come back. But in the near term, I think sectors which have been doing very well last 2 to 3 quarters, like some of the export-oriented themes, and you can say some of the capex-oriented themes, I think those will should continue to do well. But some of the larger pockets like financials and all, private financials can face some pressure on growth and NIMs, but at the same time, private NBFCs can do well during this, I think, at least for the next 1 to 2 quarters.
All right, Dikshit, with that, thank you so much for being on the show and helping our viewers understand all the nitty-gritties from your end to align their portfolio with their financial goals. Thank you.
Sure. Thank you.